Most people spend their entire lives as professional consumers. They are experts at spending, masters of debt, and geniuses at wasting time. But the wealthy? They operate on a different frequency. They don't work for money, they work for assets. Today, we are going to bridge that gap. We are exploring the 12 principles that will turn you from a person who buys things into a person who owns the world. Principle 1. Profit over wages. Jim Rohn taught us a vital lesson. Wages make you a living, but profits make you a fortune. A consumer is obsessed with the size of their paycheck. An investor is obsessed with the size of their profit margin. To shift your life, you must stop looking for a raise and start looking for a return on investment. You must shift from being an employee of your desires to being the CEO of your future. Principle 2. The 70-30 rule. The average person earns $1 and spends $1.10. That is the philosophy of a consumer. Millionaires follow the 70-30 rule. You live on 70% of your income. You give 10% to charity, 10% to active investment, and 10% to passive growth. If you cannot live on 70%, you are living a life you cannot afford. Discipline your spending today, or your spending will discipline you tomorrow. Principle 3. Assets versus liabilities. Consumers buy liabilities that they think are assets. They buy the fancy car, the designer watch, and the big house, and they call it success. But an asset puts money in your pocket. A liability takes money out. An investor buys the asset first and then lets the asset buy the luxury. If you want the toys of the rich, you must first build the engine of the wealthy. Principle 4. Delayed gratification. The greatest enemy of wealth is the need-it-now culture. Consumption is instant, investment is patient. You must learn to suffer the small pain of saying no to a new phone today so you can say yes to a new lifestyle 10 years from now. Most people trade their future for a weekend of fun. Don't be most people. Principle 5. Investing in self-education. Formal education will make you a living. Self-education will make you a fortune. A consumer spends their money on entertainment, Netflix, video games, and gossip. An investor spends their money on seminars, books, and mentors. Your mind is your greatest asset. If you feed it trash, it will produce a trashy life. If you feed it wisdom, it will build an empire. Principle 6. Understanding compound interest. Albert Einstein called compound interest the eighth wonder of the world. A consumer sees $1 as something to buy a coffee. An investor sees $1 as a money seed that can grow into a forest. Every dollar you spend today is $1,000 you are stealing from your future self. Stop killing your seeds. Start planting them. Principle 7. Working harder on yourself. Jim Rohn's most famous advice was work harder on yourself than you do on your job. If you work hard on your job, you'll make a living. But if you work hard on your skills, your mindset, and your philosophy, you will become an investor in your own potential. You don't get paid for your time. You get paid for the value you bring to the marketplace. Principle 8. The law of association. You are the average of the 5 people you spend the most time with. If you hang out with 5 consumers, you will be the 6th. If you hang out with 5 investors, you will be the 6th. The day you turn your life around is the day you walk away from the big spenders and start sitting at the tables of the big thinkers. Your circle determines your tax bracket. Principle 9. Managing the risk. A consumer is afraid of losing money, so they never invest. An investor is afraid of losing opportunity, so they manage the risk. You cannot reach the second base if you keep your foot on the first. Wealth requires courage. It requires you to step out of the safe zone of a paycheck and into the growth zone of ownership. Calculated risk is the price of freedom. Principle 10. buying time, not things. The ultimate goal of an investor is not stuff, it is time. A consumer works more hours to buy more things. An investor works more effectively to buy back their freedom. When you have enough assets paying for your life, you own your time. And when you own your time, you truly own your life. Stop trading your hours for paper. Start trading your paper for hours. Principle 11. Emotional control. The market is a device for transferring money from the impatient to the patient. A consumer buys when they're excited and sells when they're scared. An investor removes emotion from the equation. You must master your impulses. If you cannot control your emotions, you cannot control your money. The rich stay rich by acting on logic, not feelings. Principle 12. Generosity as an investment. Wealthy people know that you must give to receive. It is one of the paradoxes of success. Giving 10% of your income is not a loss. It is an investment in your character. It reminds you that you are the master of your money, not its slave. Generosity opens the doors to new opportunities and keeps your philosophy healthy. The shift is the internal revolution. The shift from consumer to investor is not a bank transaction. It's an internal revolution. It's the day you stop being impressed by what people wear and start being curious about what they own. It's the day you realize that looking rich and being wealthy are two very different things. Choose to be wealthy in silence over being broke in style. The power of the why. Why do you want to be an investor? If your why is only for a bigger house, you will quit when it gets hard. But if your why is to take care of your family, to leave a legacy, and to never be a slave to a corporation again, that why will keep you disciplined. A consumer has wishes, an investor has purposes. Find your purpose, and the discipline will follow. The discipline of detail. Millionaires are masters of the details. They know where every dollar goes. Consumers have leaky buckets. They earn well, but don't know why they're always broke. You must keep a record of your journey. You cannot manage what you do not measure. Turn your finances into a scoreboard. If you don't track it, you can't grow it. The trap of mediocrity. Society is designed to keep you as a consumer. The ads, the credit cards, the buy now, pay later schemes, they are all traps to keep you working for someone else's dream. To be an investor, you must be a rebel. You must decide that you will not follow the herd into the slaughterhouse of debt. Be the outlier. Be the one who says no to the average life. Building the momentum. The first $1,000 is the hardest. The first $10,000 is a struggle. But once the momentum of investment kicks in, it becomes a force of nature. It's like a snowball rolling down a hill. A consumer stops the snowball to look at it. An investor keeps pushing until it becomes an avalanche of wealth. Don't stop until the momentum is doing the work for you. Final call to action. The clock is ticking. You are either spending your life or investing it. There is no middle ground. Every choice you make today is a brick in the wall of your future. Will it be a wall that keeps you imprisoned in debt or a fortress that protects your freedom? The choice has always been yours. Draw a line in the sand today. Stop consuming. Start investing. You have the seeds of a millionaire inside you, but those seeds will never grow in the soil of consumerism. Move to the soil of investment. Work harder on your philosophy than anyone else in the room. This has been the Jim Rohn MasterClass. Your journey to wealth doesn't start tomorrow. It starts now. Design your destiny.